From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
This is the COB. It is Tuesday, the 10th of October. I'm Nadine Blaney.
And I'm Danny Akuye.
Danny, your shirt well picked for the day that was today.
No, my green shirt doing its work. The ASX 200 actually rallying. It's off its highs, but still up 75 points or just over 1%. And there we go, the SIBO 200 up almost 15 points or 1 1/10%. So pretty great performance that we've seen.
It sure is. When you consider we've got heightened awareness of all the violence in the Middle East between Israel and Hamas. Oil prices actually coming off a little bit.
Yeah.
Gold, still displaying safe haven status. But yeah, it's pretty incredible that we saw all 11 sectors higher. And of course, it did follow a session on Wall Street that while bond markets were closed, we did see equities higher as well.
Yeah, there were some futures trading around in bonds, as well as an ETF called TLT, which tracks 20-year US Treasury yields. But it's really interesting. Let's turn to the three themes, because I had a great chat with Ronnie Green today, and he's just noting we've seen this dovish tone starting to come out of the Fed, and he was just sort of saying maybe when 30-year Treasury yields got to 5%, they were starting to get a little bit, the tightening's getting a bit too tight. So has the Fed turned?
Yeah, doing the heavy lifting for the Fed. Okay, and look, we obviously will touch upon some of the unrest with our guest host that's coming up, Martin Crabb from Shawn Partners. Really pleased to see him here, but we'll do a quick tour around some of these major sectors for those of you listening and watching at home. Not quite the enthusiasm, as I said, for the oil sector, in the wake of yesterday's huge gains, though. You can still see Woodside Energy, and it's not on the list, but I think it's worthwhile mentioning that the ACCC did approve the Brookfield-led takeover of Origin Energy as well. At one point, I think its shares were up by 5.5% today.
Absolutely, and that may have been displayed somewhat there with the likes of AGL up 4.5%, APA up 2.5%, and that comes off the back too of some buying in more interest rate sensitive sectors, which includes the likes of they're the staples, they're firmer today.
Yeah.
Which is nice to see because they have been under the pump. But the REITs also, they were a lot stronger today, particularly Charter Hall, which is one of the more volatile ones. And yes, so interest rate sensitive sectors.
I thought you were going to say sexy sectors.
It's all going terribly wrong.
Well, tech was higher today.
Tech was higher
so if
as
you want
well.
to talk sexy sectors, I don't know. Are you feeling like adding growth to your portfolio locally? Not sure,
Too
Danny.
many tongue twisters today.
All right, let's see what rated in terms of, corporate stories. I mentioned Origin Energy. Okay, so finishing the day up by about 5%. It was really interesting to note as well that Virgin Australia, not listed yet, but it put out a pretty solid profit upgrade, and now we're getting reports coming through in the media that we're looking at a postponement of the IPO plans, saying that the owner, which is Bain Capital, of course, will monitor some of the market conditions into next year, I should say. Core Lithium. Now, there was a broker note coming from Citi, and I think it was on valuation grounds that it did upgrade it. Pilbara, I noted today, though, Danny, it was one of the worst performers yesterday. If you recall, it was one of the best performers last time I looked today.
Yeah, up 6%. That's pretty cracking. And that's maybe just these stocks just got so washed out. Some of the brokers are coming through with some upgrades.
And just beaten down names today, doing well.
Absolutely.
But Lynas had a new chair. I don't know if you saw that. I actually just saw that coming through over the weekend. And Weebit Nano, so the company is confirming that its Israel-based operations have been unaffected by those Hamas-led attacks over the weekend, because Israel really is, a center for innovation. A lot of these tech companies come from Israel. And I had a conversation earlier with just some of the economic devastation that this will bring clearly to Gaza, because there was an agreement to bring some of the workers across from Gaza into Israel. But look, we'll touch upon that a little bit later in the piece. Pilbara. Start of the day.
Oh yes, let's hear what our experts had to say. I think it might have been a Rudy Philippek van Dijk and who was the other guest? Sean.
That's me.
Well, they gave me a hard time on the call.
It was Sean Cartwright from Endara
Sean
Capital.
Cartwright. I knew it was Sean.
usually the great investors in commodities always tell you, you buy them when they're down, and you just sit down until the bounce comes, because the way these stocks trade, the difference between going down and going up is absolutely massive. And before you know it, the share price can easily double or triple, given that they went down by 40-50% before that.
Pilbara is one of the largest producers in the country. They've got further exploration activities they're working on, and their scale. And in some of the research that we put together only a month or two ago, looking at the net zero targets that we've set for 2030, if we're to meet those, every lithium project currently known to man, even if they come online in 2030, there's going to be a 55% shortfall in the amount of lithium we need to feed these batteries. So when you look at the data, if Citi are a little bit right and it tracks sideways for a while, over the long term, there is so much upside. I have to put a buy on Pilbara at these prices.
So that is, I think they're getting a bit rare. That was a rare double buy coming from our guests in relation to Pilbara Minerals.
Lovely, excellent.
So you'll have to listen to that full episode of the the call, I should say, to get their full investment thesis. But shall we turn to bigger picture?
Absolutely. And our guest, we have Martin Crabbe in the studio from Shaw and Partners. Martin, lovely to see you. Thank you for coming in. And just looking at these interest rates being repriced, I mean, I was talking more dovish Fed, but we have seen some movement, haven't we, in the rates markets?
Massive move. So, as you said, Columbus Day holiday, there was no trading in US Treasuries, but there's ETFs, zeros and TLTs and these other things that were up 2.5–3%. And the futures market, I think the 10-year bonds rallied 16 basis points during the session, which is a massive move. So we're back to sort of 4.6 on the US 10s, which were knocking on the door of 5 not that long ago. And I think the two Fed speakers overnight kind of just got people thinking, well, hang on, most commentators don't understand the mechanism, the monetary policy transfer mechanism in the US market. We look at it here in Australia, the market's priced out any rate hikes. And the reason for that is they now don't think the Fed's going to go, because people buy a mortgage in the US, it's 30-year fixed rate, right? So it's what happens at the long end of the curve that influences people's behaviour. And what's been happening at the long end of the curve is those 30-year treasuries are up to almost 8%. Which is crippling, right? There's no way you're going to buy a house and lock in an 8% mortgage unless you work in Silicon Valley or a coder or something like that, and you can afford the 8% a year. So that's doing the work of the Fed. That move higher in long-term rates is doing the work of the Fed. And that's kind of what they said. Well, okay, if the long end of the curve is doing all the work, then maybe the short end doesn't need to move any higher. And that's kind of what the market's gone. Light bulb moment, we don't need more rate hikes. So the Fed don't go on the 2nd of November, then we're not going on the 7th of November. Even if this CPI on Thursday's a little bit heavy, and the Aussie CPI on the 26th is a little bit heavy, if the Fed doesn't go, I can't see the RBA going. So you've seen this big shift in the narrative in 24 hours. You know, we've gone from being worried about geopolitical risk and what's happening in the Middle East and oil prices, and that's inflationary, and to all of a sudden it's like a massive rally in the long end of the bond market. So it just shows how fickle the market is.
It is, and are you also in there assuming that the Fed is not going to be fickle, in that if equities continue to rally, like the Fed has said that they're not really worried about financial stability risks.
No.
So you don't think even if we start to see a big rally in equities off the back of these changing expectations for rates, that's not going to spook the Fed?
Yeah, I mean, they try to play a straight bat on this in terms of saying we're looking at inflation, we're looking at unemployment. Yeah. And financial markets, beyond the financial stability issues like we have with Silicon Valley and First Republic, etc., that's really outside their purview. So it doesn't really matter what Wall Street's doing. It's really what's happening in Main Street, and in particular in around financial stability. So they're continuing to sell, because one of the reasons you've got this term premium is the Fed itself is unwinding this massive balance sheet, right? So it's gone from $9 trillion to $8 trillion of treasuries. So it's dumped $1 trillion of treasuries in the past 12 months. And that's put pressure, because they're all long-dated US treasuries and mortgage-backed securities. So they're actually part of the reason that you got this term premium. So it's a little bit self-reinforcing, but I don't think the Fed's going to worry too much if Wall Street rallies.
Okay, so my question as well is I read a note on the weekend that was particularly worrisome when it comes to the state of a lot of the regional banks in the US. Do you think that we're sort of sleepwalking into some sort of a bank crisis in the US
Yeah,
again?
so the big issue there's two big issues. One is losses on unrealised losses on treasury positions, which is what blew Silicon Valley Bank up. And the second one is commercial real estate loans. And if you mark both of those to market, some of the 4,500 banks that are out there are technically insolvent. So the Fed sort of solved that by a thing called the term funding program or something it's called. And it's where a bank can hand back its treasuries at par to the Fed. So not at market value, because if it's a 10 or 30-year bond, it's probably halved in value. It doesn't have to sell it at market. It can hand it back to the Fed at par, and the Fed will hold it for it. Okay. So that sort of closed that risk right down, and they did that after Silicon Valley Bank. But the commercial real estate one's still a live issue, and there are some regional banks that are trading at like half times book because the market's saying, look, if you guys can't hand your real estate back to the Fed, you can hand your treasuries back, but you can't hand your real estate back. So you're going to have to work that through. So is that a risk? Yes. Is it a major risk? Probably not.
Okay.
Yeah, probably not.
Maybe let's turn home with what's going on with iron ore upgrades, which is really interesting because everyone has been quite surprised by the resilience of that market.
Yeah.
We know the narrative, China weak. What on earth is iron ore doing? So what are the big investment houses doing, Martin?
Well, there's probably three big investment banks that we speak to that have all upgraded their long-term iron ore forecasts in the past couple of weeks, one based in South America and a couple here. And they've moved it from sort of $65 to $85. So it's a big move up. And it comes back to the iron ore price in Aussie dollars on that chart is at $180. And, they can dig it out of the ground at 20 or 30. So you think they're making a mint. Surely the price has got to come back. But the issue that's happening, and Rio talked about this in their Pilbara site tour, which is ongoing, is their costs are going up. So they've guided their costs up to $20 a wet metric tonne US, and I think they've been sort of 15 or 16. So the whole cost curve's shifting up, and China's always had a pretty high cost structure. But the fact is, China's not slowing down dramatically. It's not going to pump prime its real estate market like it has done, but they're still building stuff, and so their demand's holding up. And then we've got emerging economies like India who are increasing their consumption. So Rio talked about consumption growing from 1.7 billion tonnes to 2 billion tonnes, albeit over the next sort of 10 years. So no sort of massive decline and costs going up. So all that means we're not going to get $60 iron ore or $50 iron ore, which is what everyone thought we were going to get. We might get $75 or $80 iron ore long term, in which case those stocks don't look too expensive. So we haven't seen share prices move, but we've certainly seen upgrades to target prices and earnings estimates on the back of it.
Okay. Let's get stock specific. I did mention that takeover of Origin Energy. I mentioned there's reports, at least, that Virgin Australia might delay the IPO. So we've got Newcrest exiting the market. We've got, what's going to be left?
Yeah, well, it's interesting that 3 out of the top 100 companies have all got takeover bids live. I mean, Newcrest is done. I think Newmont's going to get that, so that's going to go. It now looks like Origin's going to go. The other one's Liontown. So Liontown Resources got put in the 100 despite it having a takeover bid to it, which is interesting. Why would you put a stock
S&P,
S&P in their wisdom? So that might disappear as well. It wasn't that long ago that someone bid for Ramsay Healthcare, so there's another one with a question mark over it. So you kind of got maybe 4 or 5% of the Aussie market's just going to be taken off the boards. Now, this is not a new thing. If you look back at the ASX 100 a decade ago, you'll find lots of stocks that aren't there anymore that have been taken over, whether it's Coca-Cola or Sydney Airports. There's a heap of them, right? Yeah. So, but it's just interesting that M&A cycle is happening at a time where the IPO market is almost closed. We've sort of got AirTrunk. There's a deal that we're on, Tasmea, but there's not many others in the pipeline, as you said. So it's interesting that the market's shrinking in some respects.
Yeah, and in the small end, there's been a number of takeovers, particularly in tech as well.
Yes, a lot of activity.
It's a really interesting dynamic.
Maybe it's time for Canva to come to our market as opposed to going to NASDAQ.
They might get a higher valuation than the NASDAQ.
Dual listing, Martin. But let's have a look at some of those longer duration stocks, as they're called, technology stocks. Again, some of them got quite beaten down recently. I mean, we probably all should have had our little buying boots on. on. You know, have we missed the boat?
I don't think so. I think there's this concept of duration, which I think increasing numbers of investors are understanding what that means. And it's about convexity without getting too technical. So the longer duration, the further out the earnings are, the higher the convexity of the stock is. And so it moves more when longer term interest rates move. So you've seen a big sell-off in growth stocks last month in particular through no fault of their own. So Altium was down 10%, WiseTech's down, you know, probably 20 or 30%. They did have an earnings issue. But a lot of these other quality growth stocks have been beaten up just because of that move in long-term interest rates. Now, that's looking like it's starting to unwind. I mean, one day, you know, what is it, a swallow doesn't make a summer. But you know, early signs as that long-term interest rate starts to come down again, those stocks will get a bid. So we saw that today in spades, some of the big moves in the market today with those long-term growth stocks. And you know, we've got a handful, you know, whether it's Altium, Aristocrat, CSL, ResMed, Macquarie Group, you know, there's a few in that camp, all of whom will perform quite well if this long-term interest rate continues to come down.
I have to ask, just because you said ResMed too beaten down, crazy buying opportunity?
No, we love ResMed. We've been not quite backing the truck up, but pretty close to backing the truck up. When it got down to that $21 level, look, we've had a look at GLP-1. We've looked at the obesity epidemic. We've tried to, you know, calibrate those two. There is clearly going to be some impact to obstructive sleep apnea if everyone takes this drug. But not everyone can afford to take this drug.
Take this drug and take this drug forever.
Yeah, that's right. So,
and also there's a lot of side effects, which I've heard it's pretty grim, some of them too.
Yeah, if you go back 20 years when bariatric surgery first became a thing, everyone said the same thing, right? Everyone's going to get bariatric surgery. There's going to be no fat people, and you don't need sleep apnea masks anymore. That was the kind of conclusion. That clearly hasn't been the case. There's 1 billion obese people in the world, most of whom are undiagnosed with sleep apnea. So we're big fans of ResMed, and you get these opportunities occasionally in the market where a really good quality business gets sold off dramatically, and it's a great opportunity to buy it. So we really like it.
Yeah, you get that, and you also get stories like this that almost take on a life of their own. You know, all of a sudden the world has changed because I can't say it. Ozempic?
Ozempic. And Wegovy
has come to light, you know, and the poor people who are diabetic and actually really need it can't get their hands on it.
That's right. You can't get it in Australia.
Look, Martin, we're going to have to wrap it just for time,
Yep.
but it's always good to have you here with us.
Great to
Thank
be
you
here.
so much.
Thank you.
We didn't get to talk to you about U.S. earnings, but I'm sure we will next week. Okay, just to take you through quickly some of these market leaders, because I think we've probably covered off a lot of the key themes.
There we go.
Beaten down companies, broker notes.
Yep, absolutely.
Culver there.
Yep.
From yesterday's worst, one of the worst, to, you know, one of the best today.
Absolutely. And I don't know anything about Neuron Pharmaceuticals or 3%.
I feel like I saw some news associated with that, so you keep talking.
Yeah,
I'll look that up.
Well, that was up strongly yesterday off the back of those higher oil prices. Bit of profit taking coming in there. NIB Holdings often also off 1%. You never know. You might see some of the insurance companies, maybe some profit taking might start to sneak in if we do see bond yields moving down slightly. CSR also off by just over 1%. Newcrest, well, had a huge rally yesterday, so no surprises there in terms of a bit of a
not seeing any news to answer the question. In the small to mid cap space, just quickly, BrainChip. There's never really anything to be honest. Atlantic Lithium got the go ahead to move some wires around one of its projects. That put a rocket under its share price. And Amaero, I'm showing off here now. It actually has decided to shutter all of its Australian operations, divest all its property. It's going to move fully to focus on the United States.
Fair
so that's
enough.
why it was up by close to 12%.
There we go. And losers in the small caps. Nothing really on My Energy. Wasn't Lease Energy Limited? Wasn't that yesterday?
That was, one of the best performers or
anyway,
worst performers.
So volatile. Who knows?
Let's get a look at what's happening here tonight. Well, not here tonight, but around the place. We've got the NFIB Small Business Optimism Index coming through, and we've got a whole bunch of Fed speakers yet again.
More Fed speakers. That'll keep us on our toes. Maybe they'll come back and contradict everything that was said last night.
Don't know. Today we had the NAB Business Survey, which we haven't touched upon, which showed, you know, real resilience in conditions, some good, really optimistic, on inflation.
Cost coming down, which was really interesting, and price rises easing off, which I thought was very interesting. And apparently US Fed minutes also coming out. That must be
that's tomorrow.
Yep. Pepsi is reporting tonight, if anyone's interested. Bank of Queensland earnings report tomorrow, and we've got some AGMs.
Yeah.
Oh, interesting. CSL, Commonwealth and IAG.
Yeah, well, I'm glad you brought up PepsiCo, because if you were listening closely yesterday, you would have heard us talking about, whether or not there'd be any sort of, amidst other, economic indicators, any mention of Ozempic and these weight loss drugs that we're giving free advertising to constantly. But here's a chart I found via the Daily Shot. I thought this was really interesting because they put up this chart showing, I think we've got it, guys, yeah. Mondelez, a food company, PepsiCo, McDonald's, Yum Brands, and Wendy's. And they have drawn the conclusion by this price action that it could be a reflection, these dramatic drops in the share price, to do with some of the narrative, at least, around these weight loss drugs, which, I just thought was an interesting thing as a PS to our conversation.
Yeah, absolutely. And Coke's been sold off as well. And I was picking up that a lot of stocks like Pepsi and Coke, they're trading back down to earnings multiples that we haven't seen for over a decade. So
yeah, I mean, it could be to do with consumer spending and everything as well. But interesting to see how these things can pick up steam.
Oh,
through
totally.
All
the narrative. Speaking of narratives, I just want to mention, had a great chat with Simon Holmes a Court about small modular reactors in North America. He's just done a big trip over there, and just if you're into uranium, really interesting. And we also had another special guest today, Peter Harcher.
I was going to say, you had a lot of good conversations today. I'm a little bit jealous.
Bit of a cheeky girl here, but Peter Harcher's is also really well worth listening to. What's going on with Israel, etc., etc. He brings so much colour to the conversation, and obviously it's a really tough subject, what's going on over there. But I just think for all investors, it's definitely worth listening to in terms of potential escalation. Not saying it's going to happen, but just two rather interesting guests that we had today.
What I'll do is, if you're familiar with the website, ausbiz.com.au, if you scroll down, you can actually get to different areas of the website. And so I'll put that interview under Editor's Picks and the Simon Holmes Court one as well. So just it's an easier way to find them on the website. But we've got a whole bunch of interviews that we've done throughout the day-to-day that you can catch up with. We'd love it if you did. In the meantime, we look forward to seeing you tomorrow morning.
Have a great night.